Hello guys. Marco, Volt Invest Marco here again and doing some new weekly analysis for the next week. Yes, of course. And what we see, first of all, what we can literally just insanely see that the dollar has making a big move to the upside here on that one. What is pretty interesting, and we go over to that move on this video today. So tune up and let's look how we can profit out of this. Okay, so let's look at how which setup we are going to use for this current week. Yeah, right now I'm in zero trades, as you can see here, $5,000. Almost at the beginning again, back to the beginning. Not work that good. It's fine, no problem. Here we are a little bit of down, and we open up a new $5,000 position on a one step right there, and trying to pass that one. So full transparency on that one. So let's go over to the analysis. Just quickly, let's go over to the dollar. Yeah, the dollar spiking high with the bonds rising, right? The 10-year yield, as you can see, pushing massively to the upside, almost 3.3% up right there, causing of course that the expectation for rate hikes are getting higher and higher and higher. Inflation spiked hard, as we were, for example, all expecting. What we were expecting was, the oil prices make the inflation spike really hard, and we can see core inflation rate from there we go. It is right there spiking, 0.1% almost, and the where it was, the PPI just spiking over 0.5 to 1.4%. Pretty strong inflation spike on that. The jobs data remains pretty solid on the US dollar as well. Industrial production month over month really strong, increased. That's also a good sign for the US dollar. We have as well inflation spiking up because of the oil prices. Of course, we are still above the 100 mark, which is taking a lot of time to bring this thing down, and the conflict in the Middle East is still not clear yet. So let's see what this brings us. But let's start over with, first of all, the dollar. Yeah, as we can see, for sure we get a bullish momentum on that one. Okay, we have the 300 score on the dollar at the moment. Weekly trend is showing us still something of a little bit of a consolidation phase, neutral territory. I would still use this as neutral. Daily structure is showing us potentially, almost a break. This was our support level, holding good as a resistance level at the moment. Yeah, right there, holding good as a resistance level. But if we break this one, this could easily shift to a daily structure shift to a bullish one, and then we would have a score of 320, which is pretty good on that one. Yeah, seasonality stays still bullish, and the momentum stays bullish. So let's quickly check the COT positioning and the net positioning, how the big players are on that one. Okay, we check at the 3 years as always, and we see the net positioning increasing again to the upside. That means we closed up last time, and we open up another long and closed short. That is a pretty bullish reading on that side. So this one gets a bullish one. We get almost a 380 points out of 400. That means we are extremely bullish on the dollar right now. And if we check the sentiment score of the other people, how they behave about how retail traders are actually looking at the dollar, and you can literally see Euro USD long. That means people are betting for the euro to go up. Okay, and that's almost 65%. 33% are currently trading Euro USD. Okay, GBP USD same, short and long. Okay, USD JPY, people are betting short against it. Okay, that's pretty interesting. What we can also see, USD CAD. Okay, with the oil prices a little bit something of a 50-50, I would say, okay? With the oil prices spiking up, this has a reason, okay, fine. But the net positioning is still neutral on that side, but COT position increased massively to the upside. And this is for sure a bullish read on that one. GDP growth QOQ, that's what we get in the next time. I think we get the GDP. Yeah, let's see how the GDP works out. And yeah, on the jobs market, still extremely bullish on inflation side. Sadly bullish. It's good for our dollar, but it's yeah, it's bad for the stock market. It's bad for the other things, and it's also bad for retail traders, not retail traders, for normal people in America, right? Yeah, inflation going up, guys. That's a big problem on that one, but we can take advantage out of it. Okay, so yeah. Also, cryptocurrencies. We go over quickly next after that. Over the cryptocurrencies, because I'm pretty interested in some things, and I realized that I do not have EURUSD anymore here. Okay, that's what we're going to add again, and there we go. Okay, fine. So let's go over with the futures chart. That's pretty better because you have a better clear sight and something like that. Okay, fantastic. So let's go over the dollar, and the change of character was already on the futures side. Okay, now we need, of course, this one. Where it is. There we go. Yeah, now we need to literally see that like that, a retest of this support area right there, and the push to the upside. Okay, so that means we should be pretty strong on the dollar on the next week. And let's quickly check what we can trade against the US dollar on that one. Okay, so let's go over to the euro, yeah, the counter pair. Okay, and let's look. The score is at 204. Pretty neutral, yeah. It's still not bearish, but it's pretty neutral. On the weekly trend, we are still in the neutral area. Okay, so let's quickly check that one, weekly time frame, and we are. Yeah, I would even say it's more of a bearish area, of course. Yeah, weekly trend switch to bearish. Daily structure. And that's what I say, guys. Don't only look on the dollar index, right? Look always also on the pairs, right? Because as you can see on the weekly time frame on the Euro USD, yeah, we are something of a little bit neutral and something like that. But on the futures chart, we already see more of a bearish shift on that one. Okay, so if we just round up this, you can literally just see that we're getting constantly rejected by that trend line. Okay, so on the weekly time frame, we are bearish. We switched on the daily time frame to something of a neutral territorium, or yeah, let's say neutral area, something like that. Yeah, we could say this is a neutral area on the daily structure. Yes, it is. We have a seasonality on the bearish side still for the May. Okay, momentum is switching to neutral. Let's quickly just check it, and yeah, this is already not a neutral, the momentum, because this is a strong momentum to the downside, as we can see it like that. What I expect happening next week is that we might push though here, might get some support anywhere here, and get like that confirmation. Where we can get that confirmation, I think it can probably be like here on that one. Okay, here could be the fantastic opportunity to get a short on the Euro USD, in my opinion. Yeah, so it is always only. Everything is only my opinion. So yeah, that's like right there. Fantastic. So this area right here could be an interesting one to short it. Okay, fantastic. So let's go over to the next one. So we have the Euro USD as our pair. Okay, Euro USD also momentum, fantastic. Momentum switch to bearish, and now check the COT positioning. It should be bearish. It should be bearish, but let's quickly check this out and confirm it. Euro FX, and we see long opening and short closing. That means we are actually getting bullish on the COT positioning. That is pretty interesting on that one. Yeah, maybe. Okay, that's pretty confusing, but yeah, let's do it. It is a bullish reading on that one. Okay, net positioning is on the it's on the neutral side, correct? Okay, so yeah, with that COT positioning right there, we're getting almost a bullish reading on that one. Okay, interesting. Yeah, economic growth bias, also German GDP QOQ, balanced trade, Eurozone GDP QOQ was worse than expected. Yeah, we had also inflation spiking up. On that one, we have inflation rate right here on the Eurozone. In Germany, it was slightly below what was pretty interesting. I don't know how this actually happened. But it happened. Yeah, unemployment rate stays still bad. The jobs market bias on the European government, on the European country stays pretty bearish. Yeah, it's pretty bad. Okay. So, GBP, let's quickly check what the GBP is showing us. And we can see on the GBP, big shift in our scoring system. Yeah. We see, first of all, a little bit of a neutral weekly time frame, not a bullish one. It is now a weekly trend, not neutral, yeah. The daily structure shifted just simply to the downside with this change of character, with a massive move, momentum to the downside. On that one, of course, we have the momentum also on the bearish side, incidentally on the bearish side. The COT positioning is showing us probably something of it is showing us a lot of longs getting opened and a lot of shorts getting closed. That means the net positioning just decreased a little bit to the downside. So this is a COT positioning and net positioning. Net positioning neutral on more bearish side, but COT positioning bullish on that one. Okay. The GBP economics shows a little bit neutral side. Okay, the inflation, as you can see, guys, everywhere the inflation is spiking because of oil prices. Why is it so? Yeah, everyone is using oil for growing the economy, right? Let me just get a drink here. Stay hydrated, guys. That's pretty pretty important on that one. And inflation rate year over year stays neutral. The UK yield is rising, that's for sure. So what we right now see in the market situation is that we see pretty on every currency rising yields, right? Rising bonds. Look at this. On every country, we see it on the US dollar, we see it on Germany, we see it on the GBP, we see it on the Japan, right? On 1.4% already, 4.7 on the NZD, on the Australia, right? We see on Canada rising 3.060, okay? And we can see on the NZD also rising bonds, yields, right? Now we can see also, also yields rising, the 10-year yields, right? The 10-year yield just broke out with the Canadian dollar, massive to the upside. That means with the Canadian dollar, we can just literally see, and probably the probabilities for the Canadian dollar at the moment are the highest for some rate hikes. Still with the Bank of Japan, that's for sure. And GBP also rate hikes. So guys, that is pretty obvious what we can see here, and that means simply that we're going to see a year with no rate cuts, I think. And let's just quickly confirm it, okay? 70th of the 6th, 2026, 99% no rate cut, 95% no rate cut, 80% no rate cut. And 76%, 48%. So the only chance for a rate cut, not even a rate cut, it is even an increase. There is more of possibilities that we get an increase already in the end of the year, that we get rate higher. That is pretty bad for gold, that's for sure. And it's good for the dollar, that's for sure. And it's literally good for the currencies, right? Because the printing starts to stop. Okay, so yeah, starts to stop. I mean, it's stopping. The printing is stopping on the banks, right? For the loans and something like that. So yeah, let's see how this develops. But the currency market could be right now pretty easy to trade just by looking at the statements of the banks. Because if we see statements of the banks that we see rate hikes, like we see it already on the Australian dollar, that's why the Australian dollar is pretty strong in the last days, right? And got a big hit here from the dollar also, as well. Yeah, because the dollar, the probabilities for rate hikes just increased. Okay, and we went from the beginning of the year. We went from literally 3 or 2 rate cuts in this year to almost 0, and we went to rate hikes. That is pretty interesting how the market can change over 1 year. Yeah, the stock market should get probably for some time a big hit. The only thing what the stock market is right now holding pretty good is that the chip sector and the overall telecommunication sector is performing pretty good numbers. And we have deals on China, we have deals with America on China, on that one, on Nvidia chips and stuff like that. Also pretty interesting facts what we can just look at in the internet. Okay, and let's quickly check the fear and greed index, and let's go over it. And we see extreme greed right now, and we are above the EMA. We are pretty overbought. We are insanely overbought. So guys, please just do me a favor and do everyone a favor, guys. Do not buy that high. It is going to kill you, man. This is literally going to kill you. Never buy this high. Okay, never buy this high. I would not consider to buy this high. Yeah, you can go now over maybe next 2-3 weeks still going up, and then you will say on the comments, yeah, you said don't buy the high, don't buy the high. Yeah, but it is proven that you never should buy such a high. Like, we are so high and so far away from the 125 moving average that this is insane. Okay, so just as I said, do me a favor and just pretty quickly think about it and don't buy the highs. Okay, the next one we will go over is the JPY. Yeah, JPY is still pretty bearish on that one. Risk sentiment is still on the greed side. That is pretty bad for the JPY. And what I can show you is on the USD JPY, you can just literally see that, we get interventions. Yeah, we're trying to intervene every time. And as you can see, we try to intervene and intervene again. And we are still pushing higher, and we keep growing this trend, guys. We keep growing this trend, and probably the Bank of Japan, at any time, it will stop to try to intervene that one, because it has no chance to intervene on that one. Okay. As you can see, we try to intervene once, we try to intervene 2 times, and we are still pushing above it, okay? We try to intervene here, we try to intervene here, but the Bank of Japan and the JPY is pretty not showing any signs of rate hikes or not showing any signs of strength, right? Even with that yield increasing, okay? So you look at this, guys. The yield increasing, okay? The spiking up to 1.43 to 1%. And then going down again to 1.408, okay? This is a constant rise to the upside. The constant rise to the upside. There is just a matter of time when the JPY, when the Bank of Japan just starts to hike their rates massively, in my opinion, okay? Because if we look at the interest rates right now, and we quickly check G20s, okay? So, there we go, G20, and where it is? The Bank of Japan, right? With the 0.75 current rate, okay? 0.75. That is massive carry trade potential again against the United States, even if we now are going to increase maybe some rates, right? And the Bank of Japan stays still on hold, okay? Last meetings were still not they were not increasing last meetings, okay? Last meeting where their increase was on the 30th of October. Now, from the 19th of December, we're still staying on 0.775% interest rates on that one. So, also a pretty interesting fact. So it is a matter of time when this will explode, okay? And the carry trade is not going to be interesting anymore that much, okay? But yeah, a lot of people from Japan and from Asia are doing a lot of swap fees, and this carry trade, it is over years. So yeah, let's see how this develops. But I can just simply see on the JPY, you guys see that one. I think the intervention is not going to work out again. Maybe they will try to intervene again here, but what I can just simply see is that we might, if we break this one, we might break out pretty strong. Yeah, and the Bank of Japan is going to try and higher, right? But I don't think that this will work out. Simply as that. So yeah, this is also an interesting fact we need to take in consideration on our trading. Okay, there is nothing that we can ignore on that one. Okay, and because if we look at that one, okay, we see something like a support forming here, and as you can see, we tried to hold that one. No, just quickly showing you here, as you can see, we try to go down, we try to sell off again, but we bought that one off, as you can see in this area, yeah, where this move happened, and also where this move happened, right? And we can just take it almost to these things, okay? So we can already see that the intervention came in here as well, right? Holding support here, holding support here, holding support here, okay? And now we're breaking again this area, so why this history shouldn't repeat, just retake it, right? Because if you can see, this one is not a really healthy market on the JPY, because yeah, we have just a constant push to the upside, as you can see, just a constant push to the upside with a lot of liquidity building to the downside, okay? I can just imagine, okay, that we might see something next week. And I'm not sure about this, but we might see like a break of that one, just a retest, take out maybe this thing and this thing, okay? Just something like that, and then the push to the upside, something like that, okay? Just a quickly wick to here to stop everyone out, to take the liquidity, okay? Because if we like look at the volume range profile, okay? So then we can see, okay, you can see this is the spike, okay? Another spike is right there, and another spike is right there. So also on that one, you can see this quickly spike on that one, and then there is literally zero volume nodes here and anymore, okay? So what we can just simply see on that one, and now we're going to take everything here. Yeah, as you can see, without looking at the volume range profile, we can literally see that we draw perfectly this high volume node on that one, okay? So this is, if we get to this level, yeah, we should just trade anywhere at this level, yeah. Where we can see some maybe resistance forming is on that one, okay? So what can also happen, and that's the next scenario on the USD JPY, in my opinion, okay? Because the USD JPY is going to be my interesting pair for the next week, that's for sure. What is going to be pretty interesting, that we might maybe see that push to these highs, okay? And then the drop to the retest, and then the push to the upside. That's what I'm literally just looking for the next week. So, next week's setup is for sure USD JPY. The next one is the Euro USD, okay? Euro USD forming something. Euro USD. Maybe. The interest rate differentials, that is pretty... If the dollar is spiking up, the Euro USD is going down, right? Okay, that is pretty simple, yeah? They are almost always the same. So, Euro USD, if a dollar is pretty strong, yeah? In that case, the Euro USD is interesting, even if the score is saying you that it might be bullish, okay? But on that one, it's pretty interesting, okay? And I will take Euro USD as well, even against the scoring system. And what we have next is for sure JPY, yeah? JPY weekly trend, daily structure, momentum is bearish again, and the seasonality stays neutral, okay? COT positioning on the British pound, on the JPY, let's quickly check on that one. We have already 24 minutes in the video. Yeah, net positioning going to a little bit again of a bearish side. As you can see, the intervention happened here and immediately open up some shorts and immediately closing the longs. So they can intervene against this one, and yeah, this is a bearish COT for the JPY, and we are looking at a minus 23.3 score. How is it even possible that this one is a minus one? Okay, that's actually pretty crazy. Okay, on that one. So economic growth bias on the JPY pretty bad. Japan pretty bad. Inflation bias. Inflation neutral, right? Inflation is still neutral. That's why the Bank of Japan don't want to increase their interest rates, because inflation is not spiking up on that one, okay? But maybe it will spike up because of the oil prices. We will see. The unemployment rate stays still on the last reading on the bearish side. Okay, and that's for the JPY. So interesting pair for the next week, and we will take it like that because this is the currencies. So we take it like that. We take the euro on the weekly setups, the futures one. Come on, let's do that. Oh, okay, fantastic. The euro one, and let's take the JPY. Okay, fantastic. This one a short. This one is a short as well, and we take the dollar, of course, on the bullish side, guys. That's for sure. Okay, GBP. Stays still neutral, stays on that bullish side, but also we always see if the dollar is spiking up, it takes down the GBP and it takes down the euro USD. That means we can just simply trade both of this, but we shouldn't trade one currency against everything. So don't go out there and now buy the dollar against everything, okay? Maybe it can work out, but don't do it, okay? I just make a big mistake on that one and lost a lot of money on just buying the dollar, even if it was spiking up, yeah? Just don't do it, okay? And now look at the AUD, yeah? Because the AUD is right now the only currency which is pretty holding still strong. Do not broke any structure to the downside, something like that. No daily time frame break, okay? We see a big momentum shift, that's for sure. We see a momentum shift, that's what we also can mark out here. Yeah, we see a bearish momentum. Seasonality stays bearish. The daily structure stays still bullish, intact, okay? And the weekly trend stays still also intact, okay? Yeah, on that one. Fantastic, okay. So the Australian dollar with a really, with also a strong bullish sign as well. COT position, let's quickly check that one. And it's pretty going to, I think, a 30-minute video, yeah. And we have a change of long, we open up another longs. Oh my god, we are already on for 84,000 net positioning. I think this is the highest one. We were never higher than 83,000, 84,000 net positioning. Guys, be cautious on that one, okay? Be cautious. I would be cautious on such a huge net over bullish. Oh, that's literally not bullish. That is over bullish. That is over bullish. It can get even more bullish. Let's quickly check on 4 years, okay? Yeah, on 4 years, it's insane. On 5 years, it's still the highest. And let's look at the 10 years. It is almost on 10 years, guys. On 10 years, we are on the highest point with the Australian dollar. Let's quickly check on that one. Yeah, let's confirm it, and it's confirmed. We are pretty massive bullish on the Australian dollar. I don't know what is brewing there, but I can tell you just one thing, and that's pretty much that their interest rate is getting increased, right? They're increasing the interest rate, yeah, as a first country, increasing insanely interest rates. We are almost at... Yeah, we are almost, I think, let's quickly check on the Australian dollar on the interest rates. I think we are, there it is, Australia, 4.1% previous rate, and we had an increase of 25 basis points, okay? Interesting fact on that one. And we can also see last meetings, as you can see, the changes. Only the Australian dollar, Brazil just decrease, okay? And we have only one increase, and that is from the Bank of Australia, the Reserve Bank of Australia. That's a pretty interesting fact. What is right now interesting for me is, as I said, the JPY. So for me, the interesting pair is going to be for sure the Euro USD. Okay, Euro USD, interesting for the short side. For sure. The USD JPY on the long side, but with more of a pullback. Okay, pullback scenario. And I don't know why the USD CAD is away from here, but yeah, let's edit quickly the USD CAD. There we go, USD CAD. Okay, fantastic. Also USD CAD pretty strong to the upside. And let's quickly check on that one, and let's look at the CAD pretty quickly, because COT position stays, remains bullish, Commodity flows went bearish. I need to say, because yeah, the gold is getting sold off, right? And that's what we're going to quickly check right now. XRUSD. There we go. Fantastic. Let's add that one, and we should see a downside move. Yeah, we see a massive downside move because of the 10-year yield, because of the interest rates raising. Yeah, so yeah, for me, if I would say I need to have a direction on the dollar on gold, for me it's short. Okay, so this one is for sure a short one. Okay, so that's pretty much the story for the whole financial market and the currency market. Okay, let's quickly check the Canadian dollar. It's also not that much which happened. Daily structure is shifted. That's for sure, right? It shifted. Am I correct? That is the 10-year yield. That is also the yield. And let's quickly check it shifted, a change of character. And it shifted more to the bearish side, but I would say it is more of a neutral. Okay, so let's see on that one. Okay, there we go. Yeah, going down. Yeah, good. Momentum for sure bearish. Yeah, seasonality stays bullish. Okay, weekly trend stays neutral. Okay, COT positioning. Let's quickly check that one. What is right now holding the Canadian dollar, and what is my biggest concern, is the oil prices. Yeah, that's the real thing. What we need to take a look. Yeah, we have an increase of long, we have shorts, we have a pretty neutral COT print, but a net positioning also neutral. Okay, so neutral COT, neutral net positioning. Okay, so that takes us down to pretty strong bearish. So yeah, we can trade the USD CAD. Okay, we can do that one. We can trade the euro. We can trade the Australian dollar CAD, the Audi CAD. That's also interesting part. What we can trade. Okay, but yeah, as I said, it is all depending on that oil price, and it's pretty high right now, guys. And I don't want to break down here, so be careful with the Canadian dollar. So for me right now, even with the Canadian dollar staying on that pretty bearish sign on that one, yeah, it's not a pair which I want to trade right now. Okay, let's quickly check the NZD, because the NZD is also looking pretty good, and the NZD is pretty strong spiking. It's pretty strong spiking also on the yield going. On that. On the future chart, you have change of character, break of structure, right? Still a bullish sign, still something of more of a neutral daily structure, in my opinion. Even if we do not have something like a break or something like that, this could easily be only a pullback, yeah. But with the dollar spiking up, and that's what we all know, with the dollar spiking up, the NZD is also a carry trade, and is pretty much going to the downside, yeah. But weekly trend neutral, daily trend neutral, momentum shifted for sure bearish on the bearish side, and we have only a 240 score right there. And let's quickly check the COT position, because this is going to probably our next pair for shorts. Let's quickly check that one, and we check the 3-year. We see change shorts. We see a bullish COT positioning. Okay, that's interesting part. COT positioning switch to bullish, and the net positioning stays, I think, still on that neutral side. Correct. It stays, neutral, more leaning to a bearish side. net positioning stays still bearish. Risk sentiment is still bullish. Okay, GDP, nothing changed. The yield still rising on that one. Yeah, also pretty clear. Okay, so that's it for all the currencies. We have 35 minutes in. So just for a quick conclusion on that one, dollar remains strong, pretty strong. Dollar Euro USD is going to be my interesting pair for this week. USD JPY is going to be my pair for this week. Let's drag this down again back to here where it should be. Good. Yeah, that's it. Okay, Euro and the JPY. JPY pretty weak on that one. So okay, so Australian dollar against the JPY, pretty interesting pair as well. And let's quickly check that one. I think I will be Euro USD and AUD JPY, to be honest with you guys. And let's quickly check that one. This week's setups, come on. There we go. This week's setups, and this is going to be a bullish one. And I think I will take this one out, but I will take this in consideration if we get to these areas. Okay, so yeah, Euro USD short and the AUD JPY long. That's pretty sure. Yeah, AUD JPY already on that area. While AUD JPY already had that pullback. Fantastic. Intervention here? No, it's not really an intervention. Let's quickly check on that one. Yeah, AUD JPY is still good performing on that one. But we need to take into consideration that the AUD is overbought massively on that case. And let's quickly check where we can find some positioning for the volume range profile. And what I take in consideration is right now this area. And I think this area is nice of a zone where we can just entry on that one while we open up the market. Yeah, because it is pretty something like that, showing us here a lack of volume. And on that one also, like right here, as you can see, showing us also a lack of volume. And whatever we tapped in, something like that. Okay, so we want to see something brewing here on that one. That's pretty sure. So if we get that trade done here and we can open up this trade here on that one, where is going to be our target? It is going to be the break of structure of that one. Okay, where it can take us, I have no clue. The sky's the limit, I would say, on that one. So it's pretty interesting on that one. So for the next week, just the conclusion, AUD JPY, Euro USD on that one. If something change, I will just do a quick short or something like that. Check out my other social media platforms here where I do some highlights and pretty interesting, pretty interesting words from my YouTube videos. And let's go quickly over, we are already in 38 minutes, okay? So just to quickly think on the on crypto. Cryptocurrencies already in that massive support here on that one, yeah? Interesting. I have the feeling that we might, push on that one pretty good, pretty insane on that one like that, okay? The Ethereum right now also in pretty strong support. XRP, pretty strong support. Solana, pretty strong support. Okay, BNB, also interesting pair for me right now. Not only that support, I think that we might push even lower, get the bounce right here. Sui, I took also a small position on Sui on that one. So yeah, as you can see, I'm a little bit of invested in crypto again. Yeah, the crypto market is for me right now also an interesting thing where I can get some money out of it. Yeah, Sui also in a nice support, and the H-bar is also in nice support. Yeah, that's quickly for it. Quickly for the cryptocurrencies. If you want to know more about cryptocurrencies and we should go over cryptocurrencies, then leave a like, leave a commentary that you want to see more of cryptocurrencies. We can do that as well, because I like to trade cryptocurrencies. And as you can see on the liquidation heat map on that one, we take out this massive block to the upside, and what we're building above us is from 82k to 84k. A lot of liquidity which can get taken out by the market makers. Yeah, that's for the video. Just quickly ended with 40 minutes. I don't know if you would watch it. I would be pretty I would like it pretty much if you would commentary it, like it, and just watch the whole analysis, because it is a lot of information which I'm giving out here for completely free. Okay. That is everything what I just learned over the whole years. This is my whole experience. Just in the whole video, I do not take any courses. I do not need some money on that one, because I am like really in that positioning that if you make money with crypto, or if you make money really profitable, and you are really profitable with trading, you don't need to sell courses, because as I said, you make enough with trading. And so everything is for free. Everything you can look. You can see my weekly setups, and I do not have any Discords. I do not have any signal groups or something like that. Just simply giving away everything of that one. And I hope you can use it for your exercises, for your education purposes. And I hope I can help you with that one. Wish you a great week on the next week. The heads up, guys, and never surrender on the trading. If you want to become a trader, never surrender. Just never surrender. Please trust me on that one. You will at any point achieve your goals. At any point you will achieve your goals. Okay? So see you in the next weekly analysis. I hope you like it, and leave a like, commentary, what I said again. Bye, guys.